The Hedgeless Horseman here. It's April 25, 2022. Another lovely day in this irrational market. Gold price is down, metal prices are down. Basically everything is down. People are running around with hair on, hair on fire, panicking. I've gotten some messages from people like, when will this stop? People saying, I'm ready to call it quits, etc. Again, makes no sense to me. It's like the whole point. What I am after is to buy the most amount of value for the least amount of dollars invested. So you want cheap prices when you're buying something. You want to buy lows. You want to buy as cheap as possible. You want to have the risks to the upside. And people typically, of course, when I get a message about, I'm about throwing the towel, it's never, there's never a reason for it really, except that I cannot take more pain. I cannot cope seeing my portfolio down anymore. I want to get out of this. I want the pain to stop. But like, if investing was about doing what felt good, let's say, everybody would be rich. That's obviously not the case. You're supposed to do what makes absolutely the most sense at any given point in time. And to me, it makes absolutely no sense to sell something that is cheap. And if your biggest problem is that you think that cheap can get cheaper, meaning that something you thought is cheap already goes down in price, that's a luxury problem. I mean, imagine being in the overall markets, let's say, where the average PE might be, 30 or whatever. I mean, many stocks are down 50% or so, but it's like, okay, prior to the stock market peak, let's say. I mean, if you're buying something at P30, that's a real problem, because that could get cut in half, and there might be no serious reason for why it should go up again. I mean, that is a risk to me. Buying something that should go down and stay down. Juniors should not go down, but they can go down, but they will not stay down forever. They will not stay this cheap unless we get asteroid mining or the mining sector goes away. Otherwise, it's going to turn up, and I don't think asteroid mining is happening anytime soon. And given that there are so many black swans, etc., out there, and gray swans out there, I mean, anything can break at any given point in time, because things are going from bad to worse. It's not getting better. So it's like, what sector would I be most comfortable in right now from the start? Gold. And gold juniors are very, very cheap already relative to gold. I mean, there are cashed up juniors that literally raised and got cashed up like in the last 2 weeks. That I saw some down 13% today. That makes absolutely no sense. You can't justify that. The value of the company certainly didn't go down 13%. The value of their projects, the value of every scenario going forward for that company didn't drop 13% in value just because gold is down 2% on April 25. We have no idea where gold is going to be, a year from now, 2 years from now. So this is just volatility, this is just emotional selling, this is just people panic selling because they can't take it anymore. And I mean, if investing was about doing what felt good, everybody would be rich. That's not the case. You're supposed to do what makes absolute most amount of sense. Be rational and calm. I mean, typically, okay, when are mistakes the costliest? The costliest mistakes you can do is selling low, selling cheap. That's way costlier than buying high. So, okay, that should mean that one of the best edges one can have is being calm and rational when the pain is, highest, let's say. Because that's when mistakes are the most expensive. The absolutely most costliest mistakes is, or take gold for example, like selling here, selling there, selling there, selling there. What one is it easy? Buying here, buying here, buying here. So if you can stomach, the more pain you can stomach, and it's like not just buying anything that's down, but being rational about it. And because if you really knew what you were doing, you wouldn't see a declining share price, well else equal, as something bad happening. You would see it as, okay, now I can exchange money for even more value. I'm buying more shares. I'm buying a higher percentage of ownership of a particular company for less and less. So you're buying more for less, pretty much. That's what one want to happen, obviously. Anyone would want to buy a car the cheapest, an apartment at the cheapest price, etc. Except for when it comes to stocks, for some reason. And now we actually have a break in daily RSI here. This looks a bit weird. I don't often see this many touches on a support line like this. So today there's like, capitulation selling, panic selling. Personally, I mean, the physical gold and silver I own, that's not for trading anyway, so I don't care. I don't own COMEX gold, but this is what everyone is obviously watching. I have physical and I have juniors. And the juniors will dictate what their value is. Their news releases will dictate the results they have, the job the management team do. That's what will dictate the value of the junior. Yes, the gold price will influence that in some way, shape, or form, but most of those juniors are not anywhere close to being mines. And if gold goes down 2%, I mean, some of these juniors, I think, will have exploration campaigns coming that will increase their intrinsic value by 100%, even if gold goes down to 1700 or whatever. I mean, I think juniors are already pricing in, gold levels around here. So there's a huge margin of safety in the junior space already. So it's like I have I'm not inclined to sell any juniors. They've just, on a day like today, they're cheap already, and they've just become even cheaper. And on the long-term perspective, I think gold is very much in a bull market. So I don't know if this holds, if this will be, a zigzag correction. I don't think a crash will happen. And even if it does, I mean, let's say gold actually, I mean, given what happened today, you see some juniors down 10 to, let's say, 15% today. What do you think they will be trading at if gold goes down here to let's say 1600? Assuming this kind of relationship, 2% down, 10% in gold, paper gold, 10% down in juniors, they would be so absurdly cheap that you would get 10 baggers in almost everything you can put your hands on. So that's gonna, any dry powder deployed at that point in time, it's gonna have such obscene expected value that you can afford, a bunch of paper losses, and you don't need to buy that much to supercharge the portfolio going forward. And it's like, I don't know who came up with the idea that if you're sitting on paper losses, you can't win. I mean, that's what everyone is worried about. And that's what everyone, let's say, cast stone at other people. Like, oh, you're holding this stock that's down 50%. Like you can't beat the market if you have 50% corrections, let's say. I mean, that's just complete bullshit. I've been all in since 2015, basically, pretty much all in with my entire net worth. And at this point in time, I only had one portfolio. So I began my investing careers in juniors with a 54% correction. That breaks most people, like we're seeing right now. Most people can't cope with one of these, and they'll sell out here at the bottom. which makes absolutely no sense because they were so incredibly. I thought they were cheap here. They were ridiculously cheap here. I just kept buying and buying and buying, and then things turn around. And just to show the difference of buying, let's say, low and high, from this point, my portfolio returned. This portfolio returned 2,600%. If I bought this bottom, it returned 5,800%. That's more than 2,500% higher future returns from this point than this within 7 years. So I hope you're starting to understand why I think, I mean, what are the costliest mistakes? The costliest mistakes you can make is selling low, selling cheap. Let's say I'm not complaining about the results from this point in time. I really am not. And note then that I still, even though it went down 54%, 7 years later, up 2,600%. So it's like that's a fallacy. You gotta, in my opinion, stop thinking that you can't have corrections if you want to beat the market. No, what makes you beat the market is that you do the right thing during those corrections. If I sold here, you could forget about. I would be giving away 5,800% in hindsight. So selling here cost me 5,800% in 7 years. Do you realize how extremely costly that is? And why I think that one of the biggest edges you can have is to stay rational when everyone else is irrational. If you can stomach this kind of pain, this kind of paper loss, and do the right thing, what typically happens here? The more pain you get is because something typically has gone down in price. So most people are getting more and more inclined to sell when the cost of selling, the mistake of selling, is going up exponentially. So I think honestly that my capacity to cope with, let's say, pain is one of the absolutely biggest edges I have. And if you think this is enough, I think, to break most people. And these are just some corrections that have happened after this. This was ended in 2016. The very same year, 8 months later, another 53% correction. And then another 57% correction in 2018. And then a 57% correction 2020 during the flash crash, and I've had many 30% corrections. So how many people do you think can hold on seeing this, every other year, or sometimes, even two such corrections in 1 year? Almost nobody on earth is going to be able to do that. And still, 7 years later, or through this entire period, what do you think I was doing during all these corrections? What do you think I was doing down here? What do you think I was doing down here? What do you think I was doing down here? What do you think I was doing down here? The future returns as price declines, they are going up exponentially, not linearly, exponentially going up. So if you sell, and of course, I mean, I didn't buy the exact bottom. I bought all the way down. And the cheaper it got, the lower it went, the more stressed I felt about, finding even more dry powder. Because I know this. I know the difference of the future return difference of buying cheap but higher than super cheap. So I was thinking when these price declines happens, like, any money I'm putting in right now will have absolutely enormous future returns. So I get extremely greedy. I'm extremely greedy right now, while most people are thinking about throwing in the towel. So the one that sold me, let's say, shares during this bottom, they gave me a 5,800% return, and they not just from this exact buy, obviously, but I hope you get the picture. It's like when you buy low, there's someone selling low. And right now, again, so when people message me, it's not about they don't say I'm thinking of selling or throwing in the towel because I think I'm holding overvalued juniors or mining shares. No, they're thinking about selling because they can't take the pain. So the more pain you can take and stay rational, the better your long-term results will be. If you can stay rational after crashes like this or during crashes like this, you're gonna beat over 95% of people, because over 95% of people will not be able to buy these lows. They will not be able to think that if I'm down 55%, I must be doing something wrong. I missed something. The market knows something. They're not cheap. I better get out now before they crash more. You don't sell after a crash. I mean, most juniors, at least that I own, they're on an upward trajectory in value. So when price declines, as their value trend is going up, that's again exponentially increasing price to value trend and gap. So I mean, you do whatever you want to do. I'm just saying that if you think you can't beat the market long term, if you don't have any, if you have corrections, that's absolutely bullshit. It's these very corrections that help you beat the market, assuming you take advantage of the opportunity. I would never have results like this if the junior miners didn't crash. If junior miners right now have been going up for the last 3 years and were expensive, my future returns would be pretty poor, I think, over the next, let's say, 2 years. But at these levels, it's like I think I'm picking up shares in companies, and I think those shares on average will be trading 2, 3, 400% higher than when they are now within 3 years. And the lower they go, the higher those future returns are. So again, if you find yourself thinking of selling for the only reason being that you can't take it anymore, that should tell you something. You are not being rational. In my opinion, the only rational reason to sell any stock is because it's overvalued or there are better opportunities out there, even cheaper stocks. So ask yourself that at any of these bottoms, when you see crash in share price, are you selling because you're scared and can't take the pain and fear about the immediate future? Or are you selling because you really do think this company is overvalued? Right now, I have seen almost nobody comment on valuation. Everybody comments on where they think gold is heading. And based on what gold is doing today, they're getting scared in juniors. And they're selling juniors not because they're overvalued, but because so many people look at gold and sell the juniors. And that makes them even more terrified. So it's just a cascading effect. And I've already seen some juniors that start down. 2 hours ago were down like 13-14%. They're down maybe 7%. So they've already gone up like 7-8% from that bottom. I'm not saying they can go down more, but you see the 7% a 7% swing within a day, that's huge over the long term. I mean, the stock market averages 8% per year over the long term. And you see daily intraday swings of that order right now. So if you think this market is so hard, seriously, to beat over the long term, can you explain why you can at the same time pick up juniors that are cashed up for, let's say, 13% less than they were valued at, priced at on Friday, just because gold is down 2%? That makes absolutely no sense. And they already started from a cheap level. No, this is the easiest market in the world if you get it, if you understand sentiment, if you understand that the opportunity is buying low and the harvest comes later. You sow cheap, you harvest later. You don't harvest in the same day, typically, even though you could actually harvest in some of these stocks with a small position. No, this is, I've seen this a lot of times before, as you see, and even my hodl portfolios I manage, they're not even close to 50% down from the recent high. So this is just another day. This is just business as usual. The market is totally dumb. I mean, this is probably one of the dumbest, most irrational, and most sentiment-driven sectors in the world. So and there are mistakes being done all over the place on a daily basis, especially on a day like this. You should be amused when you see gold being down 2% and some junior gold stock, high quality junior gold stock, that nothing has changed for the company. They have one of the best exploration stories in the business. If that's down 10-15%, you should be amused about the fact that some poor schmuck is selling that 15% cheaper just because gold is down. And he's panicking. And I don't know where we are in this correction when this will be over. So I mean, that might happen here, and then said person who sold at 15% cheaper because gold is down 2%. If that stock keeps on declining, let's say, he's gonna think that he did he was rational. No, he wasn't rational. You have no idea when the bottom is in, because the same guy that sold that, he's probably gonna sell this. And one day the bottom will be in. And it's going to take a while for him to dare to go in again. Maybe he goes in here. So let's say he sold here or kept selling or didn't buy here. But someone who started here didn't sell when this guy sold, who thought he was so smart when he saw the share price keep declining. But this person who didn't sell, he just kept on buying. So he got more and more shares for his money. His position has grew bigger and bigger. His average cost just came, kept on declining. And when this guy buys back, when the guy who sold here buys back when this is up 50% or whatever, you'll probably already be sitting at a nice profit when this guy enters again and starts buying higher and higher. So it's like, again, you're responsible for your money. I don't share your profits or your losses. I'm just saying what obviously works, has worked for me, has worked extremely well for me. And I think, again, the ability to withstand pain in the short term for future obscene long-term gains is one of the biggest edges you can have. So I have many large corrections. I've had a bunch of 30 and 25% corrections as well. It doesn't matter in the end, because I'm always buying the lows, because this is when the opportunities are the highest. The declining share price when value is intact, that's an exponentially better opportunity. So I'm just buying, trying to buy more and more as price declines. And the end result is that I can compound like crazy over the long term. But most cannot cope, even if they have 30% of their portfolio or even less in juniors, they get increasingly more likely to sell as price declines and opportunity goes exponential. I think that's just obviously the most irrational thing you can do. And if you want to really beat the market, there's no better way or no better time to start doing that than during times like this. Because what you do and think during times like this, when everybody's hair is on fire, everybody's negative, all Twitter is negative. What you do and think during these times, that tells you a lot about how far you've come in your investing strategy, let's say. So and I mean, on that note, I thought this documentary on poker is pretty on point. It's a bunch of Finnish poker players, some of the best. I remember this guy, he was playing high stakes, talking about poker. I hope you can read the subtitles.
Että se pelkkä matemaattisuus.
Pelaat on ihan parempi, joten sun pitää pysyä oikeasti siinä kehityksessä mukana.
Pokeri vaatii kyllä tosi paljon eri ominaisuuksia, että se pelkkä matemaattisuus, tämmöinen looginen päättelykyky ei riitä, koska muuten ehkä matemaatikot olisi maailman parhaimpia pelaajia, mitä ne ei ole. Kyllä tosi tärkeä ominaisuus on tiltinhallinta, eli kylmähermoisuus, että sä pidät ne hermot kurissa. Kyllä mä muistelen omia pelejä, niin kyllä melkein kaikki ne on kuollut sukupuuttoon, jotka ei pystynyt siihen. Eli kun jollain kävi tarpeeksi huono tuuri tai oli huono päivä, niin se alkoi pelaa niin paljon huonommin, mitä se muuten pelasi. Ja ne tappiolliset sessiot, mitä se aiheutti, niin se ei saanut nyt kiinni enää.
I think that basically sums it up. I mean, it's a great documentary. I can put it up on the site so people can watch it. Just think about what he said. The ability to control emotions. Obviously, what he means is that fear or greed should not influence your decisions. If you can stay calm and do what is rationally the correct thing to do, then you're gonna beat the market, then you're gonna beat poker. I actually think the market is a lot easier than poker, because in poker you had to make the right decisions, on average, being more right than wrong on every decision, and you were making decisions all the time. In investing, it's a lot more low maintenance. You just buy and then wait, basically. So I don't miss poker at all. I think poker was a lot harder than investing, but that's also why I think that my experience of playing poker is why it was so easy to, relatively easy for me to start doing well in the markets in an emotional sector immediately. Because in poker you could never afford to make decisions based on how you felt. You always had to make the most logical decisions, pretty much, and basically suppress your feelings of greed and fear. So that's what I'm doing in the markets. I do what makes most sense, and it makes absolutely no sense to sell something, a sector that's like generationally cheap, because you're fearful. Obviously, that makes no sense. If there's almost never been a time where they have been cheaper, then that means that there's probably almost never been a time that they were more obvious buys. And they can, they can, get cheaper, but that's not really a big problem. And it's like in poker, my poker graph, for example. I mean, I had periods of, let's say, bad luck, where I played a bit worse. You have corrections, small corrections, corrections. The trend was up. So that's, I think, I mean, when you think about that, I have corrections, I have corrections. The trend is up. So I just kept on doing what, played the best I possibly could, because I knew that even if this was, perhaps I had a, bad variance down here, I, was, quote, unlucky for a while. That doesn't last forever, and sometimes you have more luck, more good luck than bad luck. So you have, you win more than you should, and here maybe I lost more than I should. But I always, but if you kept playing good, the trend would always be up. So if you keep on making good decisions, keep buying when it's cheap, keep buying when it's cheap, keep buying when it's cheap, the trend is going to be up. The trend is going to be up, but you will not. I don't know when a bottom is in. I only know that an opportunity gets better and better. So if you're the best player ever, you're going to buy every low. But you don't know when any low is, obviously. So you just, buy more the lower it goes, because someday the low will be in, and then you're going to make a lot of money in the future. Thanks for listening. I hope you got some, comfort and perspective, etc., and realized in one way, shape, or form that's like most people, have no idea what they're doing. They don't know why they're buying. They don't know why they're selling. Like right now, for example. And whoever said that you can't have big corrections and still not do well is absolutely. I don't think that person beats the market. I know what my returns are. I know what my strategy is. I know it has worked. I know what I do. Whatever makes most sense. I mean, I don't really follow newsletter writers. I don't really care about macro, etc. I always do what makes sense to me, because I think there's so much bad advice out there. And I mean, a lot of people making a living or making a name for themselves trying to guess stuff that's very hard to guess. But it's not. I don't need a lot of guesswork to realize that juniors are cheap right now. So I try to control and focus on the things I can control. Well, there's so much noise out there that makes you want to do stuff, and typically they're not even right in their predictions. So I don't care. In my opinion, okay, yes, we're in for a daily swing lower in gold, but is that a problem for me being in mostly in juniors? No, they're too cheap already to be selling anyway. So I don't know if when the correction is over. It might be tomorrow, in 6 months, in a year, whatever. It's like they're already cheap. If they follow gold down, they're just going to be even more extreme buys. So I don't really have a problem in this environment, because there's always something I can buy. And today, for example, I just put in a few small orders in whatever of my favorite juniors that just happened to be down the most, where most people were panicking, let's say. And that ends, in the longer term, that typically works out pretty well. Thanks for listening. Quote, not investing advice. Bye.